very simple concept of only calculations is there. Is that they will give calculations, only one adjustment they will give. They will give it for how many marks? They will give it for maximum 4 marks. Somewhere they will give you in section B, and mostly in section E, financial statements. Leasing. Okay. Now when you are saying leasing, lease is nothing but you are taking it. There are two things. It is the financial lease. Is that it is a financial lease, it is a operating lease. Okay, it is a financial lease means you are paying the, in terms, it's similar to loan. It is not a loan, similar to loan. Operating lease means you are taking something, assume it is a flats, you have flats, you will give it for 9 months, 1 year, you will give it for 2 years.
Also equipment, doctor, right?
Huh?
Also equipment.
Equipment, anything, is that equipment will be there. Now everybody is doing this type of business. When you have the projects, is that when you have the project, you will not invest so much on the equipments. It needs thousands of riyals. Okay, what you will do, you will take it on a lease, you will use it and you will return it back. The simplest way of earning, the simplest way of doing the business. Okay, now when you do the things, assume you will take airline industry. Okay, airline industry take aircrafts on lease. Helicopters, they will take on lease. Okay, they will take on lease. Airline, they will take aircrafts on lease. Equipments, lease. You have trucks, you have dumpers, you have trolleys are there. Is it right? Trucks are there. Everywhere you will have a lease. You have so many. You want for one project, you think it is for 6 months, 9 months. You take it for a lease, you do it, you return it back. More feasible, not only feasible, it is more economical. Is it right? It is more economical. Fine. So keep it in mind how it will work for us. Okay. Now we are doing the thing. When you have the lease, okay, understand first 10 minutes, you will understand the complete chapter. When you have the lease, you have the right to use. Is that you have the right to use? You have temporary ownership. That's all. Is it right? And you have to pay your liabilities. You have to pay every year. Okay? You have to pay year. Assume now when you are having the lease liability, assume you have taken it for 3 years. Is that we have done in previously? The same concept will have. So when it is more than 1 year, beyond 12 months, after reporting date, okay, after reporting date, next 12 months, is that after reporting date, next 12 months, it will be current liability. Very important point to be noted. Okay, next, after reporting date, beyond, is it right? Beyond to next 12 months, beyond next 12 months, it is a non-current liability. If you understand this one, you have done with the almost the lecture. Is it? You have the next 12 months current liability. You should know after reporting date is what? Reporting date is 31st December. The reporting date is 31st December. That's all. Now we have to right of use the asset and lease liability in the record of the, and we have to we will show in the when we are doing the assets. Is it right? When you are when you have non-current assets, is it right? When you have non-current assets are divided. Non-current assets are divided what you own. Non-current assets are divided what you have taken on lease. Non-current assets will be divided what you have taken on rent. Is that lease? When you say lease,
what's the difference between lease and rent?
Yes, lease, you have a contractual agreement. Is that for For very specific, we have, when you are taking the lease, is right, we have the right to use the asset. For that period, we have the control over the asset. Whereas when we are taking it on a rental basis, we have lesser facilities. Is that we have lesser facilities. But when we are taken, you see, when we are taking it on a rental basis, what we are doing? We are showing it in the profit and loss account. When we are showing it on the lease basis, is it right? We are saying as a rent. Is that you see rent expenses? Is that rent expenses? We'll show it on that. But lease, it is not going to be like that. There will be a lease payments will be there. Is that there will be lease payments will be there? How much? What is the agreement for the 5 years? Is that what is the lease agreement? We will not say that there is a rental mean. It is mostly it is on the monthly basis. Whereas lease, if you take a lease, you have a lease contract. They say that this is lease for 5 years. This is lease for 2 years. Likewise, we will take the lease. Is that in the lease you have, in the rent we will not, it is rent, we will not show in the balance sheet. Whereas in the lease we will show as a right of use of asset. Is it right of use of asset? We have the right over the asset.
And what that is?
Pardon?
Depreciation.
Depreciation will be done.
For lease?
Okay, depreciation will be done, but that depreciation right now we are not using. Okay, we are not using that right now, that much. Okay, that much we are not using in that detail. Okay, in that detail, definitely depreciation will be there. Okay, definitely when you are using the asset, you are matching the income with the expenses. When we are reflecting in the balance sheet as a right of use of asset, lease property, is it? We will never say rented property. We will say rented property will never be reflected in the balance sheet, statement of financial position. But lease property will be reflected in the balance sheet. Is that lease payments will be there, non-current liabilities, current liabilities, we will show how much is the opening balance, how much is the interest we are calculating, like what we have done in the bonds. Is that like what we have done in the bond? That is the reason we are saying. Next, what is the difference between a lease and rent? Okay, when you are talking about the lease, what will happen at the end of the lease? You have the, sometimes you will buy the asset. Is it at the end of the you will buy, or what is the lease? I told you example of Honda cars. Is it right? Honda cars. Is it what happens? They are saying that it is for 4 years. Is it right? It is for 4. Most of the car dealers will do this. They are selling the cars for 4 years, and after 4 years there is a buyback will be there. Is that there will be a buyback will be there? Is that when you are talking about the buyback, definitely it is a, this is not a rent. Is it right? You are paying the amount in full in the beginning. You own the asset, and you own the asset. You are taking it on, not on. Again, here you are taking it on a loan basis. Everything will be done on loan borrowings. Okay, understand? Any business. Yes, tell me.
It's alright, okay.
Any business is done on the borrowings only. You will borrow money, you will buy the asset, and after the end of the asset, 4 years, is it right? 4 years. What will happen? You want to replace it. You want to replace it. What will there will be a condition, initial in the beginning, terms and conditions is there, that it will have a buyback agreement. It will have a buyback agreement. Is that now this is what happening? Is that equipments are there, aircrafts are there, cars are there, everything is there. That is the reason most of companies what they will do, they will take it on the lease, and every year, sometimes every year people will change the cars. Every year they will change the assets. Okay, every year they will change the asset. Is it? Now this is how it has to be accounted. Is that how it has to be accounted? What is the recognition criteria for lease? You will have a lessee, you will have a lessor. Is that? You have the lessee, lessee is who is going to take the services, lessor is who is going to lend the services. Is it? Now what happens? What is the account for sale? How, if it is an outright sale, what is the condition? If there is a lease back transactions where sale proceeds are equal to the fair value. Is that equal to the fair value? See, now what happens? You are buying the product. Is that you are buying the product for assume that 4 years. You will distribute it. It's like a loan, but in the loan, what will happen? The moment you will pay the loan, definitely it will your ownership. Now what here in the lease, it is not like that. Is it? It is not like that. There will be some conditions. The conditions is you are going to replace the asset. Is that the condition is after the 4 years you will return back the asset. After your requirements are fulfilled, you don't want to take that much burden. Is that another thing? The life of the asset will be for 10 years. You want this asset only for 3 years. You want the asset only for 3 years. Your project is only for 3 years. Why you will take an asset with 10 years life? What you will do? You will better to take the asset for 3 years lease. Proportionately, you will pay for that. Is that? Proportionately, we will pay for that. Is that? That is where we are talking in terms of the for 3 years. Is it? For 3 years, what you have to say? You have a right of use of asset. Is that? You have a temporary ownership. In rent, you will not have ownership. This is the difference. Is that? You are asking me what is the difference between rent and lease. In the rent, you will not have the temporary ownership. But in the lease, you will have a temporary ownership. For that period, you are going to be treated as a owner. This is the difference between a lease and rent. Is that? 3 things are there. Are you clear about this?
Yes, that's one.
The first one is lease, the second one is lease accounting, and the third one is lease and lease back. What is there? A lease is a contract. See the things. A part of contract conveys right to use. This is the most important word which you have to understand. This is a right of use of an asset for a period of time in exchange of consideration. Is it? It is for a period of time, for that specific period. What happens? Are you clear? This is the most important thing. A lease is a contract. See, rent is also a contract. This is not that rent is also a contract. Every student will ask this because there is very thin line of difference is there. Is that there is a thin line of difference? What is the difference? People say that lease and rent are both same, but technically speaking, the lease in the rent we will not have right of use of asset word. Is it? Here in the lease you have a right of use of asset. You have the right over the asset, control over the asset in simple words. The lessor is the person who will provide the right to use in exchange of consideration. They will means the owner, and the lessee is who obtains the right to use. A right of use represents, see the thing, this is the most basic definition. A right of use represents the lessee rights to use a underlying asset for a lease term. Is it? It's a right of use of asset is nothing but you have the right to use it. You have the right to have the own temporary right. I will again, just for your understanding, I will tell as that. Okay. At the commencement, the lessee should recognize there is a liability. Is that you are taking a car on lease? Okay, you will say yes. You at the beginning there is a lease liability. You have them. You are going to have a payables. Not only payables. See the thing. Now, one side you have the liability, and one side you have a right of use of asset. The liability is initially measured at what it is not on any other case, it is based on the present value. Present value is nothing but C divided by 1 plus R to the power of T. Is that C divided? Lease payments should also include your fixed payments, amount expected to be payable under residual value guarantees. I will tell you, okay? And option to purchase the asset reasonably certain to be exercised. You should have the option to purchase. Yeah, you should have the option to purchase the asset at the end of the lease life. Okay, at the end of the lease life. If you are terminating in between, breaking a contract, there will be penalties. If the lease term reflects the expectation that this will be incurred. If this any clause is there in the lease agreement, in the rent also it is there nowadays. Is it right? In the rent also it is there. You are having a rent for 12 months. If you are breaking the rent, they will say that you have to pay the penalty. But what is the penalty? They will not charge penalty. They will say that whatever the municipal expenses we have paid, you have to pay 5% of the rental amount as a penalty. Is it? But there is a quite different. Slowly and steadily you will have a clear clarification how lease will differ from rent. Is that? Now, what we are doing initially, we will calculate on what? Initially we calculate on the present value. Is it right? Now nothing is there. Okay. Now the residual value arises when the lease agreement. Residual value at the end of the contract. Okay. That the underlying asset of the end of the lease term will not be worth less than a specified amount. Means they will not be worth less than the means it will equal amount. Is that whatever you are doing we have done? If remember, I am just referring the financial instruments what we have done. Bonds, effective rate plus interest paid minus closing plus 2 plus 3 minus 4. Understand what? 2 plus 3 minus 4. That is the standard rule. Similarly, we use the same format but from a lease perspective. We will upload the discount rate as a late implicit R value. If this cannot be determined, then we will say what is the borrowing rate. Is that borrowing rate of the similar assets? What is the right of use of asset? Is that the right of is initially recognized at the cost? Is it right? The initial, that is the opening balance. The initial cost. What is the initial cost? The initial measurement of the what is the liability which we are going to pay at the beginning. Is there any lease payments made on or before commencement date? Any advances we have paid? Any initial amount we have paid? Any initial direct cost we have to add? Any estimate cost of removing or dismantling? We have done in IS 16. Is that any dismantling cost? Is it right? That the same concept we have to use it. Any incentive payments received by the lease are deducted from the incentive payments. Means any discounts, any provisions of reducing the prices and working out on that terms. Is that this we have to take into consideration when we are calculating the initial cost. What is the lease term? To calculate the initial value right of the asset, the lessee must guess the length of the lease term. Lease term is non-cancelable periods. Is that non-cancel? You have taken on lease, you have to fulfill that lease term. non-cancelable. Periods covered by an option to you can extend the lease, but you cannot reduce the lease term. If reasonable certain to be exercised, you can extend the lease. Understand point? You have taken it for 2 years, you extend for another 2 years, you extend for another 2 years. No problem on that. But you cannot say I have taken 2 years and I will make it for 1 year only. Periods covered by the option to terminate the lease if these are reasonable certain not to be exercised. Is it? Periods covered by the option to terminate the lease. If you are saying that you are terminating the lease, then they say that it's a non-cancelable. It's a non-cancelable. Once you are non-cancelable, you don't have any option not to be exercised. Is it right? Not to be exercised. This is where we are talking in terms of what is the lease, right of use of asset and the lease term. What are 3 things we have covered? We have covered very clearly. What is the initial measurement? What is the right of use of asset? And what is the lease term? Fine. Now, is that what they have said? Is that on January? Is that 1 minute? Yes. This is what? This is different one. Okay. On January 1st. Listen carefully. First question. It will take little time. Okay. I am slow. On January 1st, Dynamic entered 2-year lease for lorry. The contract contains an option to extend the lease term for a further 1 year. Dynamic believes that it is reasonable certain to exercise this option. Lorries has a useful life of how many years? 10 years.
10 years.
Now I say, life is 10 years. We are using for 3 years. Lease payments are 10,000 per year initial term and 15,000 for the option period. Option period means if you extend it, it will be 15,000. All payments are due at the end of the year. To obtain the lease, to obtain Dynamic incurs initial cost is 300, rate of interest is how much? Borrowing rate is 5%. Calculate the initial amount of the lease liability, and there are 2 questions are there, and the right of use of asset and the provide a double entry needed to record this transaction. Means how many questions, how many points we have to do? Point number A, point number B,
point.
and point number C. Read once again. Fine. Now, what we have to do? The first one is follow the steps. Is it? The follow the steps. What they said, amount, what they have said, initial value. Is it? The lease liability initially measured at the present value. Is it? The lease liability has to initially measure at the present value. Is that step 1? Is that step 1? Is that initial? See what they say. Initial carrying amount of the lease liability. Is that they say the initial carrying amount. Is that initial carrying amount of the lease liability? Initial, put point A also. Initial carrying amount. If you are not writing, write once class is over, but understand what I am writing. Initial carrying amount of lease liability. You have to take present value. Okay, we have to take present value. That, see, things are very clear. Is it right? That things are date. Is it right? What is the cash flow? See the loan, the debentures, bonds. Okay, bonds first step. What we have done is that we have a discount factor. at the rate of, what is the discount rate? They have said borrowing rate, discount rate is at the rate of 5%. Then you have the present value. Is it? This is at the end of the year. They have mentioned very clearly. It is going to be at the end of the year. All payments are due at the end of the year. Is it? At the end of the year. And if they extend it, then it will be 15,000. But lease payments are 10,000 per year for the initial term, and 15,000 per year for the option period. What is the option period? After 2 years. Is that because they agreed for how many years initially? They agreed for 2 years.
2 years.
Is that they agreed for 2 years? 31/12/2001, 31/12/2002, 31/12/2003. How much is the cash flow? 10,000. They are paying how much? First year 10,000, second year 10,000, third year they are paying how much? 15,000. Option period. And they say that during the option, and 15,000 means option to extend. Is it? Option to extend. They have mentioned here, option to extend the lease term for a further year. Okay, option to extend. Discount factor. How much is the discount factor? Tell me. 1 divided 1. How much is there? You can put like this. Is it right? You can put like this. I'm just saying 10,000 1.05 to the power of 1. 10,000 divided by 1.05 to the power of 2. 15,000 divided by 1.05 to the power of 3. How much you will get?
First one 9,500.
Pardon?
9,523.
Next. Second one.
9,070.
Next.
$13,605.
Huh?
13,605.
15,000 divided by 1.05 to the power of 3.
12,957.
957 total.
Doctor, 1.05. Why 1.05? Because of the 5%?
Borrowing rate, how much?
Borrowing rate, okay. Yeah, 5%.
31,000.
How much? Total?
31,500.
31,500. Take exact amount. How much? 9524
2,550.
9070 12,957 31,551.
What's 551?
Is it right?
9570 plus 9,070 9.43 plus 0.0 plus 12.957.
31551.
51 B.
No,
Huh?
31551.
Is it okay?
Yeah,
Okay. With that.
yes.
Cool.
Is it?
9, 2,
Okay,
Now,
okay.
this is the, see, what is the, this is the initial carrying amount, is it right? we have to calculate what is the initial right of cost of asset. Is it right? Initial cost of asset. Is it right? Initial cost of asset, right of use of asset. Okay, this is point number B. Is it right? Right of use of asset. Is it right? This is the present value. Okay, this is the present value of initial amount. Okay, present value of initial liability. Is it right? Now, initial liability, present, this is A. Okay, now initial cost of asset will be what? Present value. Okay, present value. In other words, initial carrying amount. Is it right? Initial carrying amount is how much? 31,551. Is that 31,551 plus? You see, they have given what they have mentioned. They mentioned that to obtain the lease, dynamic, what is the direct cost is there? Direct cost is how much? Second paragraph, third line.
3,000. 3,000.
Direct cost. Is it? Direct cost is how much? Direct cost is 3,000. Is it right? How much will be there? 34,551. Is it? 34,551. This is called as initial cost of right of use of asset. Point number B. Okay, point number B. Fine. Point number B. Fine. Now, you have paid this. Is that you have paid initial cost? You have paid. Okay. Now, what they are asking us? They are asking us the general entry. Point number C. Can you tell me general entry? We are getting right of use of asset. Right of use of asset. We are getting the asset is there. Asset is coming. When asset increases, it should be debit. It should, right? It should be debit. Right of use of asset. How much? 31,551. Is that? Next, we have to pay in future. Is it right? We have to pay at the end of each year. Is it right? It is a liability. It is a liability also increases. If asset increases, it's debit. If liability is increasing, is it right? If liability increasing, it should be credit. Credit will be what? Credit will be lease liability. Okay, credit will be lease liability. Okay, how much is the lease liability? 31,551. This will not change. Understand what? This will not change. As simple as that. This is with respect to lease liability. Is it right? Now you are paying direct cost. Okay, direct cost. How much you are paying direct cost? You are paying a direct cost of 3,000. Is it right?
Yeah.
Credit, cash will be there. Cash or bank. Is it right? Credit, cash or bank, 3,000. Debit is what you are paying to have a right of use of asset. Is that you are getting for right of use. If you pay 3,000, you will have the right of use of asset. Debit will be right of use of asset. How much? 3,000.
3,000.
Please understand this. Remember this. It is a easy scoring marks. This much only. If you focus on these areas, it is not a difficult thing. Are you clear about this? Point A, point B, and point C.
Yes, doctor.
Is it?
Sir,
Yes.
Yeah.
We want before that lease.
Huh?
Liability will not be for
Your voice not clear.
Yes.
lease liability.
Point B.
For lease liability will not be for that. 3,000. It should be for lease liability, right?
No, it is why release liability. See what they say. To obtain the lease, dynamic incurs initial direct cost of 3,000. Is that direct cost of 3,000? They have not said they have not said that it will be paid at the end of initial to obtain the list. See, you have to pay some initial cost
Like advance.
like advance. Okay, like advance you have to pay initial cost. Is that nobody will give you the asset just because 0% down payment. It will not be there now.
Yeah. Mm.
Is it okay, Hussein?
Yeah.
Okay. Is it clear now?
Yeah.
Fine. Next. Is that the same thing? Is that what happens? Liability. If the carrying amount of, whenever you want to stop, you tell me. Okay. The carrying amount of lease liabilities increased by interest charges. Is that, sir, if there is a interest charges, definitely you have to pay. Okay, you have to pay. What will happen? Statement of profit and loss account, debit finance charges. Definitely, if there is interest charges, your liability will increase. Statement of financial position. Is a statement of financial position. The carrying amount will be reduced when you are making payments. Is that when we are making payments, debit will be liability, credit will be cash. Is that debit will be liability, credit will be cash. There are two things are there. Okay, they will put this one, something called as payment in arrears, something payment in advance. So payment in arrears means at the end of the year.
Yeah.
Is it right? At the end of the year. Payment in advance means at the beginning of the year. Is that payment in arrears and payment in advance? They will mention very clearly. In the question, they mention whether it is payment in arrears or it is payment in advance. Now you see the thing. When it happens, you will come across. We will do this. Right now I am not going to tell anything. You have to identify what is the non-current liability, what is the current liability. Is that? See the thing. In the statement of financial position, the total liability at the end of year 1 is split between non-current and current. For payments made in advance or arrears, is it? The non-current liability represents in the balance. You have to make, it will change, okay? If you are paying in advance or arrears, the non-current liability will change. In represents the balance outstanding after the payment in year 2. Is that? Just we have to be little bit cautious, okay? And students will initially get some it will be take time to understand this concept, okay? That what is the, when we have to put in non-current liabilities and current liabilities, okay? Only payment in advance and payment in arrears, okay? The right of use of asset is measured using the cost model unless measurement model is chosen. This means that the asset is measured initial cost less accumulated depreciation and impairment losses. Just now Hussein asked me, okay, how you are going to measure initial cost less accumulated depreciation and there are any impairment losses. How depreciation is calculated? If ownership the asset transferred to the lessee at the end of the lease, then depreciation charge over the asset useful life. If ownership the asset is transferred to the lessee, okay, if you are transferring it to the lessee after the lease agreement, then it has to be charged over life. Otherwise, depreciation is charged for a shorter of useful life and the lease term. If you are using for a restricted term, you will charge depreciation for the restricted term. That is the common sense of understanding. Okay, that is not something new. If you are using for 3 years, why we will charge for 10 years? Okay, so we have to make sure they will mention each and every point clear to us. Okay, now Riyadh enters an agreement to lease an asset. The terms are as follows. Primary period is 4 years with a rental lease payment. Don't get confused, okay? With a rental of 2,000 per annum payable on 31st December. The present value of lease payments is 5710. The interest rate is 15%. What we have to show in the financial statement. See the thing. The non-current asset initially at the present value. Is that initially at the present value? They have calculated depreciation. See the thing. Primary period is 4 years. Is that the primary period is 4 years? Means they have not mentioned that there are 10 years. Primary period means total years will be 4 years. They are charging depreciation for 4 years. 1 by 4. Initial liability will be 5,710. Okay, 5,710. They say that, see the thing, the total finance charge is the difference between the total payments. How much they are paying? They are every month they are paying how much? They are paying 2,000. Is that every month they are paying 2,000? 2,000 into 4, 8,000. Initially how much they are paying? 5710. The difference between the total amount and the present value is otherwise called as a finance charge. Is that the total between the total value of the payments minus the present value is the finance charge. The allocation for each rental period is calculated. Is that first you have to take the present value. Okay, present value 57. On that you will calculate interest 15%. You are taking, see, 2 plus 3 minus 4. 2 plus 3 minus 4. Okay, only the procedure presentation is different. The concept is same. Is it? The concept is at the end of the year, what will happen? You will have the interest amount, you will have the total amount. The difference between interest and, if you take into consideration, it comes to how much? 5710. Automatically, the moment you are paying, your lease liability will be decreased. And by the end of 4th year, the lease liability will be 0. The format above will be used whenever the payments under lease are made in arrears at the end of the year. If the payments are due in advance, the rental paid is deducted from the capital sum at the start of the period. Okay, if you are paying in advance, then automatically proportionate adjustments will be done. I will come back when we are talking about in advance. Okay, what we'll say that they have calculated depreciation. Is right? This is only an extract. Okay, this is only an extract. Depreciation 1420. Finance cost is 857. Is that finance cost is 857. Right of use of asset. Here we have to be careful. This is what I want to say. Right of use of asset is how much? You have paid is it? This is the depreciation. Is it that? This is the depreciation. This is the present value. Okay, present value minus depreciation. Is it? Non-current liabilities. Is that? You have the lease. How much is at the end of the period? Is it right? See, at the end of the period, this is going to be a non-current liability. Is it? This is the non-current liability, and whatever the amount we have 4, 5, 6, 7. Is it right? What is there? The first year. Is that the first year closing balance? Is that first year closing balance minus non-current liability is equal to current liability. Is equal to current liability. Okay, the same thing, it is a extension of what we have done in the previous case. Is it okay? Is it clear to you?
Yeah, doctor.
Yes. Can we do question number 2?
Better to keep it for last week.
Okay, tell me.
Better to keep it on Thursday. We don't.
Okay.
Yeah, so tomorrow, doctor,